Alright guys, welcome back to Roxum TV. I'm your host Jamie. We've got a really interesting mix of stories today because we are looking at three big trends happening all at the same time. So first, we are watching what could be a major shift in global markets. Canada has officially entered a recession, and almost immediately, Donald Trump revived his very famous 51st state comment. We'll break down what's happening in the Canadian economy, why this matters for trade negotiations, and whether economic weakness is starting to change the balance of power between the United States and also its closest trading partners. Then we are diving into the AI race, and some of today's developments are honestly very fascinating. Microsoft is spending billions backing OpenAI, but at the same time, it's building its own AI models. Meta is facing backlash from employees after trying to collect more workplace data to train AI systems. And we also look at a very different side of artificial intelligence. So, projects backed by Human Rights Foundation that are combining AI, Bitcoin, privacy, and censorship resistant technology. The question is becoming less about how powerful AI can get and more about who controls it. On the crypto side, we'll look at a major milestone for the United States. So, Kalshi has become the first company to launch regulated crypto perpetual futures in America. For years, perpetual futures were mostly an offshore product dominated by exchanges like Binance, like Liquid. Now they are slowly moving into regulated US markets. We'll talk about why that matters and what it says about Wall Street's growing relationship with crypto. We will also revisit the story everyone is talking about this week. So, did Michael Saylor actually trigger Bitcoin's latest crash? So, strategy, we know they sold 32 BTC. That is a tiny amount compared to its holding of more than 840,000 BTC. But the market reaction has been enormous. Today, we'll separate the headlines from reality and discuss whether this sell-off is really about Michael Saylor or whether deeper liquidity problems are starting to emerge across the crypto market. And speaking of liquidity, we are going to look at a trend that I think is becoming very impossible to ignore. For years, tokenized stocks and RWA assets were supposed to be the one of crypto biggest opportunities, but now major exchanges are moving in a very different direction. So instead of tokenized stocks, they are connecting directly to traditional brokers and offering real stock ownership. Binance is doing it. Gate.io right now is doing it as well. And Coinbase is moving further into traditional finance. So the line between a crypto exchange and a stock brokerage is becoming so blurry every single month. And I think this could end up being one of the biggest industry shifts of the next few years. So we've got a lot to go through today. We are talking about recession fears. We're talking about AI competition, Bitcoin volatility. So let's get going with this first story of today. So we have to start with Canada first. So Canada has officially entered a recession. So Canada's economy, here we have the quarter GDP being announced. So new figures released this week show the economy shrank for a second straight quarter. That is the technical definition of a recession. It's also Canada's first recession since 2020. The latest data show GDP contracted by 0.1% in the first quarter, following a roughly 1% decline in the previous quarter. So 2025 Q4, we contracted 1%, and right now 0.1%. So in simple terms, the Canadian economy has been getting smaller for 2 quarters in a row, and the timing couldn't be worse. Like, guess what? We have this tweet from Donald Trump, like within hours of the recession data being released. Donald Trump jumped on Truth Social, so social media platform that he owned. He shared a headline about Canada's recession and added just 2 words. So 51st state. Like, it's a joke that Donald Trump had made multiple times before, suggesting Canada should become part of the United States. But as you can imagine, Canadian politicians when laughing. So we have the Ontario Premier, so being Doug Ford, he fired back almost immediately on Twitter. So this is what he wrote. So Canada will never be the 51st state. Canada is not for sale. So Ford also couldn't resist taking a shot at the United States, claiming Ontario created far more jobs than America on a population adjusted basis. So Canada's Prime Minister, so Mark Carney, took a more measured approach. Let's actually take a listen to this clip right now.
The US president is once again making his 51st state jab, and the US ambassador to Canada reshared it. Is this an ambassador that Canada can work with, or is it time to ask him to leave?
Look, the short answer is no to the second part of your question. And it's an administration that we have to work with. It's our biggest trading relationship. It's our biggest security relationship, many other relationships, and we work with that administration. We take the administration as it is and are working together on a number of areas, and I'll just underscore, and I know there are other questions, I'll just underscore that Minister LeBlanc and Madame Charette, une autre Madame Charette, our negotiator-in-chief, not negotiatrice en chef, they are in Washington today working with the U.S. administration discussing our trading relationship.
Just to follow up on that, does the 51st state jab at this point impact those trade negotiations happening in Washington?
The president is an exceptionally active user of social media. You probably can chart his usage of it. It's only gone up in recent months, and we're not going to respond or react to everything that he posts. Thank you.
All right, guys, so you had the man. Well, this reason, this story matters is actually because there's real tension behind the headline. So the United States and Canada have been locked in a trade dispute for more than a year. Many economists believe tariffs imposed during that period have added pressure to Canada's economy. At the same time, Canada is dealing with very weak growth, a housing affordability crisis, and slower business investment. So when Donald Trump makes comments about Canada being the 51st state, it lands very differently during a recession than it would during an economic boom. And here's why the timing is so interesting. So the United States and Canada are expected to renegotiate parts of the North American trade agreement before 1st of July. So while 51st state might sound like a joke on social media, it can also be seen as a negotiating tactic, like a way of reminding Canada which economy has more leverage heading into talks. In other words, speaking, like Donald Trump is just trying to tell Canada that US is the boss. So Canada is one of America's largest trading partners. What happens to Canadian economy affects like trade, energy markets, manufacturing, and cross-border business activity. But there is a bigger lesson here. Economic weakness changes the balance of power. Countries negotiating from a position of strength have more options, of course. Countries negotiating during a recession often have fewer. And with trade talks approaching, Canada's recession has suddenly become more than just an economic story. It's becoming a political story as well. So that's why we are paying close attention here on Roxham TV. So moving on to the next segment, we have to talk about AI. So this time, Microsoft is preparing for life beyond OpenAI. So that is very interesting. That's a very eye-catching headline for sure. Because Microsoft, think about it, has spent tens of thousands of dollars backing OpenAI. It's the company's biggest AI partner. OpenAI powers many of Microsoft AI products, so that include Copilot and several AI features inside of this. But now Microsoft is making an interesting move. It's building more of its own AI models, and that could reduce the dependence on OpenAI over time. So what happened this week? is that as its annual Build Developer Conference, Microsoft announced a family of AI models called MAI, or called Maya. The lineup includes models that can write computer code, generate images, clone your voice, solve complex problems step by step. So, in other words speaking, Microsoft is trying to build a full AI ecosystem of its own, not just rely on somebody else's technology. So the reason why they are doing this, I would say, is mostly because of money. Like because of course, like every time customers use AI services powered by external models like OpenAI, Microsoft often has to share economic with outside AI companies. So building its own models changes that. Microsoft can run these models directly on Azure, like being the cloud computing platform. That means lower costs, that means better control, and potentially higher profits. The less Microsoft needs to rent AI from others, the more money it can keep for itself. So this is also again, like, is it like a direct blow to OpenAI? A lot of people are asking this. Well, it's not like Microsoft attacking OpenAI directly. In fact, the two companies, they are still partners. But this is what large technology companies always do. So they would partner up first, then they build their own version, and eventually they want optionality. If the relationship with OpenAI ever becomes so difficult, then Microsoft now has a backup plan, and that is a powerful position to be in. So next question people like to ask is that how good is the Microsoft model? So Microsoft said one of its new reasoning models was preferred by independent testers over a competing mid-tier model. The company also claims it matched competitors in coding tasks. Now, it's important to note that these results are largely based on Microsoft's own testing. So we'll need more real-world data before declaring who's the winner here. But the message is clear. Microsoft believes its models are getting good enough to compete. And for the past few years, many AI labs would automatically assume the tech giants would keep paying them forever, like OpenAI. But history suggests otherwise. So think about it, like Apple eventually builds its own chips, so M1 to M4 right now. Google builds its own chips. Amazon builds its own infrastructure, and now Microsoft is doing the same. And right now it's building its own AI model. The lesson is quite simple. Big tech doesn't like renting forever. If Microsoft succeeds, the biggest threat to OpenAI might not be Anthropic anymore, and it might not be Google Gemini. It might actually be Microsoft itself. So, in other words, speaking, like OpenAI is facing a lot of battles that they have to complete. As for viewers watching right now, what we know is that the AI race is entering a new phase. So the first phase, it was about building the smartest models. The next phase is about owning the entire stack, like whether it's the model or the cloud or customers, and of course the profit. Microsoft is one of the largest investors in OpenAI, yet at the same time, is quietly building the tools it would need if it ever wanted to stand on its own. That's not necessarily a sign of a breakup, but it's a sign that the AI giants are preparing for a future where everyone wants more control over their own technology. All right, so we'll take a short break from here. When we come back, of course, we are sticking in the AI world. This time we have to talk about another tech giant being Meta. So Meta is backing down after a fight with its own employees because the company wants to use an employee to train its AI model. And right now is a good news that they are not doing that anymore. So make sure you stay with us after the break. We're going to give you the details in a bit.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
All right, guys, welcome back to Roxum TV, and thanks for sticking around with us after the break. We now have to talk about another AI giant, so being Meta. Right now, Meta is backing down after a fight with its own employees. The company behind Facebook and Instagram have planned to track workers' mouse movements, the clicks, the keyboard activity on company computers. The reason why Meta would want to do such thing, I mean, it's not a surprise coming from Mark Zuckerberg, but why they are doing this is that they want to use that data to help train its AI systems. But after weeks of internal backlash, the company is now erasing that policy. So employees will be allowed to pause the tracking for up to 30 minutes at a time, and some workers can even apply to be completely exempt. So the pushback inside Meta was surprisingly strong. Like employees reportedly left flyers around Meta offices calling on co-workers to unite against what they describe as an employee data extraction factory. Others complained that the software was slowing down their computers, draining laptop batteries, and increasing internet usage for people working from home. Meta eventually promised several improvements and optimizations, but by then, the damage was already done. So the bigger risk here, like why Meta is backing down right now, is not because they care about employee. It was actually because of regulators. So Meta is already under pressure in Europe over how it collects and uses personal data. And collecting detailed information about employee activity could create even more legal problems. European regulators have been taking a much tougher stance on privacy than the United States. So the last thing Meta needs right now is another battle over data collection. So this is really I would say what's fascinating is what it tells us about the AI race. So because AI companies have already trained their models on massive amounts of internet data, now they are looking for new resources of information. And increasingly, some of those sources are much closer to home. So it's not websites, it's not social media posts, but their own employees. As AI companies compete to build better models, data is becoming one of the most valuable resources in the world. And for viewers at home, like this isn't just about Meta employees, it's about where the AI industry goes next. So the demand of data we know it keeps growing, and the harder it becomes to find new data, the more companies will look for alternative resources. And the big question is where society draws that line. How much data should companies be allowed to collect? And how much privacy are people willing to give up in exchange for better AI? Meta just discovered that even its own workforce has limits, and this debate is probably only getting started. All right, so speaking of who owns AI, this is again a topic that we really have to spend time to dive into because we know AI is getting more powerful. But the question we have to ask is that who controls it? Who controls AI? Like AI is becoming a most talked about topic around the whole world on Earth. The big question is that it's no longer like whether AI will change society because we know that it is changing society and is because of AI, companies don't need that much workforce in this day and age. But the real question we have to ask is like, okay, will AI be used to give people more freedom? Who controls it? Or will it become another tool for surveillance, for censorship and control? Because literally we just talk about Meta, what they're doing to its own. That's why a new announcement from Human Rights Foundation is getting attention today. So here's the context about this, about Human Rights Foundation, or HRF. They have announced a 10 new grants through its AI for Individual Rights Fund. The goal is quite simple. So support projects that combine AI with privacy and Bitcoin, encryption, and censorship-resistant technology. In other words speaking, instead of building AI that collects more data on people, these projects are working on trying to build AI that protects users. And there are, as I mentioned, there's so many projects here on the list. We don't have time to go through all of them, but like some of the projects definitely caught my attention. So one of them is a project called the Arc. It is an AI assistant designed for East Africa. So instead of needing a credit card or bank account or monthly subscription, users simply pay for each AI query using Bitcoin through the Lightning Network. That means someone can access advanced AI tools even if they don't have access to traditional banking services. For many people around the world, like this is a huge deal. Another project that caught my attention, like if you guys are interested, do check out the website of Human Rights Foundation. So the second project that caught my attention is something called Freedom Skills. The idea here is to teach AI agents how to use technologies that are difficult to censor. So that will include Bitcoin for payments or Nostra for communication, open source tools for privacy. So machine learning engineer who is leading the project, he said that nobody will be able to say freedom technology is difficult to use 1 year from now. The goal is to make these tools simple enough for everyone to use. So let's actually take a listen to this clip right now.
So the task for everyone in this room is not to reject AI, it's to widen the definition of AI safety. It must include language-specific audits. It must include testing models on protest, dissent, exile, journalism, and minority rights. It must include asking who is labelled risky, who is made visible, and who is made silent. So when a government, a company, or a standards body tells you an AI system is safe, the first human rights question has to be, safe for whom? Because safety must include safety from the state.
Personally, I think this is particularly important right now because the timing wise is very important. Like there are concerns about government's use of AI are rapidly growing. There's so much concern right now. At the recent Oslo Freedom Forum, researchers warned that many governments around the world are increasingly using AI to monitor citizens, track online activity, or spread propaganda. In short, the same technology that can help people can also be used to control them. And that's why this debate matters. So, as I mentioned, there are many projects here on the list, like some of the ground recipients are also worth mentioning. So, another one that caught my attention is the Open Anonymity project. So, it's basically for people to access AI models anonymously. Another project, so here on the list is Zero X Zero. So it's trying to shrink advanced AI models so they can run directly on personal devices instead of large centralized servers. And then another one's called Maple AI. It is building an end-to-end encrypted AI system designed to keep user data private. So in other words speaking, so these projects, they share some similarity. It is less surveillance, less centralization, and more user control. When most people hear AI news, what they hear is that bigger models, more powerful chatbots, and some trillion-dollar tech companies. But another battle is happening behind the scenes. It's happening quietly. It's a battle over who controls the future of AI. One vision says AI should live inside giant corporations and government systems. The other says AI should be more open and private and controlled by individuals. What's interesting is that technologies like Bitcoin or Lightning and encryption or open source AI are increasingly coming together. They are forming an alternative technology stack designed around freedom instead of control. And as AI becomes more powerful, that debate may become one of the most important technology stories of the next decade. All right, so we know AI is a most talked about topics. Another most talked about topics this week. So actually, in today's show, we have to mention. So big congratulations to Kalshi. The US just got its first regulated crypto perpetual future exchange. This mattered because, like, for years, like one of the biggest product in crypto wasn't even available to most American people. That product is, as I mentioned, is called PEP, so perpetual future. Now it is changing. So prediction market platform Kalshi has become the first company in the US history to offer regulated crypto perpetual features. That might sound like a very niche development, but it could be a very important moment for the future of crypto trading in America. So recently, here is a clip I do want to show. So Kalshi co-founder sat down with Natalie Brunel from Coin Stories to explain what the company is building. So actually play a clip right now and take a listen.
So I hear you might have a digital assets announcement.
Yes. Well, yes, I think to take a step back on how we're thinking about it, and then we'll talk about what it is. Well, what it is, I think, is already in the news. So we're launching crypto perpetuals in the US.
Wow. Congratulations.
Thank you very much. It was also everything I talk about when it's regulation is in the year timeframe. So a year and a half, 2 years in the works. And we're very excited to bring it. So we have now a margin clearinghouse. So before you only cash collateralized, now it's a margin clearinghouse. We can offer leverage. We have an FCM, which is a broker that can also offer leverage on top. And we're starting, and we were able to find a framework to bring perpetual futures, which are massive outside on Hyperliquid, Binance, all of that, to the US in a very similar structure.
Can you just explain what perpetual futures are for people who don't know?
Yes, absolutely. So it's a future without an end date. So instead of thinking about what the price of Bitcoin will be on X date, you just say, what will the price of Bitcoin be? And then you can have it leverage or not.
Okay.
But why is Kalshi getting into this? I think is a question that's like, why are you going from prediction markets to perpetuals? And it goes back to what we were talking about this global liquidity pool. When we look in, like, what we want Kalshi to be is this kind of general purpose exchange that we need to have four things very good. The first one is the breadth of markets, right? So elections, sports, entertainment, crypto, securities, all of those things. We need to have a way to offer contracts on everything. Obviously, no war, terrorism, assassination, those bad things we don't do. But everything that's good, we should be able to have a market on. Second thing is market structure. We've only had binaries, yes, no markets. We need, and it's very important for us to grow and get institutional adoption, to be able to have futures, swaps, options, perpetuals.
All right, guys. So just a quick add-on about perpetual futures because not everyone have used it before. So just a quick explanation. So how it is different from traditional futures is that traditional future contracts, they have expiration dates. So if you're trading oil futures, gold future, or Bitcoin future, eventually that contract expires and you need to roll into a new one. Perpetual futures work differently, so they never expire. Traders can keep positions open for as long as they want, as long as they maintain enough margin. And that's why PEPs have become one of the most popular products in crypto. They offer flexibility, they offer leverage, and they make it easier for traders to express whether they are bullish or bearish views on the market. And if you traded crypto before, you probably use or at least have or heard of perpetual futures. So platforms like Binance, Liquid, Bybit, OKX, like build massive businesses around them. In fact, most crypto derivatives volume today is actually happening through perpetual contracts. The problem is that most of this activity happens offshore. For years, like US traders had limited access to these products because of regulatory restrictions. And that's what Kalshi is trying to change here. And that's why it is a big deal. Kalshi says it spent more than a year building the infrastructure needed to launch these products legally inside the US. So that includes a regulated exchange, a margin system, brokerage infrastructure, risk management control. In other words, they aren't simply copying what offshore exchanges are doing. They are trying to bring crypto's most popular trading product into a regulated US framework. That's something we have never really seen before. And this is, of course, much bigger than just Bitcoin's price. Like right now, the first contracts are tied to crypto prices, but Kalshi's long-term goal is actually much bigger. The company wants to expand beyond simple prediction markets. So most people, what they know Kalshi for is like contracts like, will Donald Trump win? Or will the Fed cut rates? Or will inflation rise? And that's it. But management says the vision is to build a broader marketplace that includes features, that includes options or swaps or perpetual contracts, event-driven markets. In other words, Kalshi wants to become a much larger financial exchange. So that's why we're paying attention here. Like this story isn't just about one company; it's about the direction of the industry. So for years, crypto innovation happened outside the US. New products launched offshore first. Regulators would often react later. Now we are seeing the opposite. Products that were once only available on offshore crypto exchanges are slowly being pulled into regulated US finance. So first came the Bitcoin ETFs, then institutional custody, then options market, now perpetual futures. Wall Street isn't fighting Bitcoin or crypto anymore. Increasingly is adopting Bitcoin products or crypto products and bringing them inside the TradFi system. And Kalshi's move might be another sign that the gap between crypto markets and traditional finance continues to get smaller. We will talk about some of the exchanges that just jump into the TradFi products. We mentioned Binance previously here on Roxham TV as well, but right now, like Gate.io is doing the same thing. We'll give you more details, but right now we'll take a short break, and when we come back, so don't go away, we'll talk about Bitcoins because Bitcoin has fallen to at $61,000, and of course we have to talk about tokenized stocks and whether Kalshi, whether Gate.io and also Binance getting into the TradFi market is a good move or not. So do stay with us after the break.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
All right, guys, welcome back to Roxum TV, and thanks for sticking around with us after the break. We now, like during this segment, we have to talk about Bitcoin because, not gonna lie, I woke up this morning and I saw Bitcoin was trading towards $61,000, and I'm sure a lot of people were in shock. Like, how low can we go from here? Is the worst already behind us? And one interesting narrative, like people like to put a finger on someone just to blame this crash, is being Michael Saylor. So, a narrative that is circulating on X is that did Michael Saylor just trigger a Bitcoin's latest crash? So, in just a few days, roughly $200 billion in crypto market value has disappeared. And for many investors, that is just like one person keep getting the blame. So Michael Saylor, the reason why he's getting the blame is that he sold 32 BTC. Like, he didn't buy this week, he actually sold. And for a man who spent years telling the world to never sell your Bitcoin, so here's the tweet that he made back in last year, so 2025, just like a few words, so never sell your Bitcoin. So people are quoting this and, of course, getting very upset with Michael Saylor. Well, let's be clear. We addressed that, okay, we actually addressed that previously here on Roxum TV. But right now, I feel like the frustration around Michael Saylor is still growing. And especially with this crash, it's not helping neither. So let me be clear again. So Michael Saylor only sold 32 BTC. That's roughly $2.5 million worth, compared to its treasury that has more than 843,000 BTC. That is basically nothing. That's less than 0.004% of his holding. And if we pay attention to this orange line, you see this orange line keep going up. And the sale happened on 1st of June. But like, if we zoom out and look at the ground scheme of things, you barely see there was any decline, any movement going down. So I know, like, from a financial perspective, it doesn't matter. But people are getting upset with Michael Saylor because it's more like a psychological perspective, what it means, and that's why they care so much. That's why they think it matters. Because Michael Saylor spent years building the image of just buy Bitcoin and never sell. And now investors are asking, if 32 BTC can be sold today, what about the other 843,000 BTC tomorrow? Well, the market actually got a warning back in May. So during MicroStrategy Q1 earning call, the company reported a massive loss of roughly $12.5 billion. That was the third consecutive quarter of heavy losses. Then Michael Saylor dropped a surprising comment. He suggested the company could sell some Bitcoin in just to meet some obligations and show the market that everything was fine. And the CEO of MicroStrategy actually reinforced that point. He openly stated that the company would sell Bitcoin if it was beneficial for shareholders. That was the first major crack in the never sell narrative. Many investors simply did not want to hear that. And when it comes to the track record, another reason why people are so upset with Michael Saylor and kind of not taking a word from his mouth. So another reason is it goes all the way back in 2020. So this one is interesting. Some older investors remember that Michael Saylor has been here before, like back in the year 2000 during the dot-com bubble being. MicroStrategy became one of the hottest stocks on Wall Street. The company rode the internet boom all the way to about $300 per share. At one point, Michael Saylor was one of the richest men in America. The company even bought multiple Super Bowl ads, like the chart is showing here, like MicroStrategy stock peaked shortly after that period, and then everything collapsed and it spent like years to build up that basically that wealth, that stock price yet again. So the reason here, like back in the year 2000, it was accounting problem. So the company later announced it will restate its financial results. So revenues was revised lower, profits suddenly became losses, and investors lost confidence almost overnight. And boom, the stock crashed more than 90%. So people are drawing ties between what happened back in 2000 to is now, because people say like history doesn't repeat, but it often rhymes. Now, to be fair, the situation is very different. Like no one is accusing MicroStrategy of accounting fraud today, but what people are noticing is the similarity in investor psychology. Back then, investors believed internet stocks could only go up, so it doesn't feel like a bubble at all. Today, many investors believe Bitcoin treasury companies can only buy. And when a market narrative breaks, even slightly, the reaction can be quite violent. So, is today's AI boom starting to look very familiar to the dot-com bubble? This debate is getting louder because we are living through another technology boom, like, of course, this time being AI. Even Ray Dalio recently warned that parts of AI's to today's AI market look very similar to internet bubble of the late 1990s. His argument here is quite simple. Like eventually, investors would need cash, and when they need cash, what they would do is that they would sell assets. No matter how strong the story sounds, no matter how much they believe, at some point, valuation meets reality. So personally, I don't think Bitcoin crash, and we go back to the price action here. I don't think Bitcoin crashed because Michael Saylor sold 32 BTC. That is ridiculous. Like the amount is simply too small. But I do think the sale exposed something important. Like markets run on narratives. And one of the strongest narratives in crypto right now is that Michael Saylor will buy forever. Now investors know that is no longer uh, true. At the same time, like ETF money has been flowing out. We were looking at that extensively during the Bitcoin price analysis on Roxham TV. But it's just like a quick, basically a quick overview of why Bitcoin is experiencing what it does. And not gonna lie, it's just like following exactly like the 4-year cycle. So personally, I'm not surprised. This morning, just for exposure, like I bought a little bit of BTC because I think, like from a technical standpoint, like I know I talk about all these levels of support, the entry price, and we were doing the throughout this week we were doing TA every single day here on Roxham TV. So we are looking at the daily candle, and one thing that I did is that um, whenever we drop to the hour side, so daily hour side below 30, I connected all the dots here. So I've done it before. So I put the vertical line here and see what the price action would perform. So based on this finding is that I notice every single time we drop below the level of 30 on the daily hour side, Bitcoin would crash. So in terms of Bitcoin price, we will crash another between 12.8% to 38%. So that is a rough measurement. So if we take that, and because I talk about this rising support for weeks, so actually like when we started building out the support back in early February, I was telling audience of Roxham TV about this. So what I noticed is that for the past few days, we have officially lost this support. So again, another very bearish signal. But like based on the daily hour side, when we lose that rising support, since the range is between 12.8% to 38%. So a very rough estimate that we could do is that how low Bitcoin would go. So if we take the breakout point, so being it happened on 2nd of June, so just 2 days ago. So like if we take the breakout point and we use the measurement, so 62K being a very critical level that I'm watching. And obviously we have a week literally just today. We haven't closed the daily candle yet. So if we close below, then the next support. So basically the range we're watching, let me zoom out a little bit so things are easier to look at. So if we take out the breaker point from 12.8%, so that will be 62K. But if we go all the way down to 38%, because that is the range we're looking at, that will bring us to 44.5K. Like I'm not saying, okay, Jamie, that's why that's the cycle bottom for Bitcoin. That's not what I'm saying, but the range is like roughly here. It's just for us to do the reference to look at. But like I'll just say this. Based on the 4-year cycle, the cycle bottom would happen on 5th of October 2026. And if basically the measurement is right, then we lose the 62K. I got the 58K as the level I'm watching. Is basically because like this bear flag is forming, and then I'll just connect the dots to try to see how low it would go. So just like that, and that, boom, we've got like 58K. So that is just a very rough measurement. But think about it. We dropped to as low as 60K this cycle. We don't know if that is the cycle bottom already, but 60K to my measurement, so 58K, is not that far apart. And this morning I saw Bitcoin around 61K. So I did what I do, what I had to do. So I purchased a little bit BTC. I know this level is not the ultimate sell my kidney to ape into Bitcoin, but remember, no one has a crystal ball. Like we are just making smart guesses at the end of the day. So right now the risk and reward is starting to make sense to me because we know it's a bear market, and according to the 4-year cycle, we are already like 8 months in the bear market. So yeah, we just have to consolidate, and maybe it's going to be very boring and sometimes painful for some people. But like the risk and reward, it makes sense to me. So, and buying Bitcoin at 61K is not a bad deal. Not financial advice. It's just sharing my what I'm doing, personally speaking. Just trying to offer some exposure on my portfolio. But like so 61K, what I'm doing is that I would just if I have spare money, some extra lunch money, that I'll buy more Bitcoin other than the DCA strategy. But this level, I'm not selling my kidney to get into Bitcoin. But 58, yeah, I'm selling maybe half, but like 44K, like definitely I'm selling my full kidney. So yeah, so that's what I'm doing right now. So as for going back to MicroStrategy, yeah, I wasn't thinking about doing TA, but like yeah, I feel like there's so much blame on Michael Saylor these days. Like, not just because of ETF outflow, not just because of the narrative of Michael Saylor, he's no longer buying, but like it's a combination of multiple reasons. So AI stocks are attracting capital. S&P 500 keeps breaking all-time high, so is the Nasdaq. But Bitcoin is kind of going nowhere. Of course, like a lot of Bitcoin investors are feeling a little bit salty. But like, think about it. Like all the attention is AI right now. It's no longer Bitcoin and crypto. And of course, that will affect the Bitcoin's price. And geopolitical tensions remain elevated. So the crash is not just about like 32 Bitcoin sale by Michael Saylor. That was not the cause of the crash. It might simply have been like the spark that hit another, just like a very ready, fragile market. And when markets are fragile, sometimes a tiny spark is all it takes. All right, so that's for Bitcoin. We have to talk about all these like exchanges, like crypto exchanges, are getting into traditional finance, so getting into stocks right now. And another narrative is RWA, so tokenized stocks, because the wave that we are seeing is that whether it's Binance or right now Gate.io, they are not offering tokenized stocks anymore. They are offering the actual stock options for users to purchase it. And this is an interesting dynamic. And for the past 2 years, tokenized stocks or RWA stocks were supposed to be one of crypto's biggest growth stories. That idea sounds amazing. So you buy Tesla or Apple or Nvidia or any ETFs directly on chain, you trade them 24/7, move them around like crypto. Many people believe is a trillion-dollar opportunity. But today, something fascinating is happening. Major crypto exchanges like Binance, we cover Binance again throughout this entire week because they just launched out the traditional stock, basically stock options for users. Today, we're talking about Gate.io. And I talked about Alpaca yesterday because it's kind of the company behind making all this money, basically selling the picks and shuffles to crypto exchanges these days. So major exchanges are moving away from tokenized stocks and towards something completely different, which is direct connections to traditional stockbrokers. And that could tell us a lot about where the market is heading. So Gate has officially basically launched US stock trading, but unlike many previous crypto stock products, this is not tokenized stock model. It's not an RWA token. Instead, users are connected directly to a licensed broker. That means when you buy a stock, you are buying a real stock through traditional financial infrastructure, not a blockchain representation of a stock. It's very similar to what Binance is doing with its new stock trading product. They have the same partner being Alpaca as well. And it kind of reflects a bigger trend of where crypto is going to. So the crypto exchanges are choosing a very different path. A year ago, most people thought tokenized stocks would dominate. But today, crypto exchanges seem to be heading in a very different direction. And because like direct broker access solves many problems users complain about. Because think about it, like you will get a actual real stock ownership, you will get real dividends and better liquidity and more stock options. In many cases, the experience is closer to using a normal brokerage account than using a crypto product. So there are a lot of problems when it comes to RWA stocks, tokenized stocks. So let's go through like why many exchanges are moving away from tokenized stocks model these days. So problem number one for RWA stock is actually liquidity, and that is like possibly the biggest issue here. When you buy Nvidia on Nasdaq, you are trading in one of the most liquid markets in the world. But when you buy a tokenized version of Nvidia on-chain, the liquidity is much smaller. So that means you're going to get wider spreads, you're going to get less volume, harder execution, and more price differences. Many investors simply prefer the real one. So why don't I just use a real brokerage to purchase Nvidia share, right? So that's problem number one. Problem number two is the very limited options. So most tokenized stock platforms only offer a few hundred assets. So usually the biggest one, of course, like Apple, Tesla, Nvidia, the big one, okay, and maybe a few ETFs. But the connection, like Alpaca, can provide access to thousands of stocks, sometimes more than 8,000 or even like 10,000 securities, and that is a huge difference. Problem number three with tokenized stocks is the holding cost. Many tokenized stock products are built using derivative structures, so that can create extra fees. So there's extra financing costs, extra overnight charges, and extra complexity. Meanwhile, if you own a real stock through a broker, you simply own that stock. So for long-term investors, that's usually a much cleaner experience. And there comes the dividend problem, because what about you buy a dividend stocks, right? Because like the company is giving the investors dividends. If you own a real stock, the company pays different dividends directly to shareholders. Simple as that. But with tokenized stocks, you are often holding a representation of stock rather than the stock itself. So somebody has to process those dividend payments, and they have to push that button. That creates delays. That there is extra administration and often more confusion. And many investors simply don't want to worry about like whether dividend is arriving properly in time. I'm not trying to say like tokenized stock is done, RWA is dead. Like now, to be very careful here, I don't mean RWA is dead. We are far from that narrative. We are seeing stronger growth in tokenized, I would say tokenized treasuries instead of tokenized stocks. So tokenized money market funds or tokenized private credit, tokenized real world assets. But tokenized stocks might be facing a very tougher challenge that many of us have expected, because they are competing directly against one of the most efficient and liquid markets already in existence, so being the US stock market. So the bigger story here, again, I'm not suggesting that RWA, to be specific, like tokenized stocks is dead. The bigger story here is the line between crypto exchanges and traditional brokerage is disappearing. So Binance is offering stocks literally this week. Gate is offering stocks. Coinbase is expanding traditional financial products. Crypto exchanges increasingly want to become all-in-one financial app. So a place where you can trade Bitcoin, stocks, ETFs, future, and stablecoins all under one account. The original vision of tokenized stocks was to bring Wall Street onto the blockchain. What we see now might be the opposite. So crypto exchanges are bringing Wall Street directly into crypto. And right now, that appears to be the model winning the race. So whether we like it or not, that seems to be the trend moving forward. All right, so that's pretty much mark up the end of today's segment, today's live show. But before you go, make sure to give us a follow on X. So my X is jamjamcrypto_io. Make sure to follow Roxum TV as well, because we have regular news coming out on a hourly basis, covering not only AI, not only Bitcoin, but like basically so much valuable content here, covering macroeconomics as well. And we have prominent guests joining us on a regular basis. So there's so much you probably do not want to miss out. So make sure to give us a follow on X, and make sure to subscribe if you haven't already. As always, my live show is here Monday through Friday, starting at 3 a.m. Eastern Time. If you don't manage to catch my shows live, don't worry, the recorded version is also available on both channels. So being Jam Crypto YouTube channel and also Roxum TV YouTube channel. Thank you guys for watching. I hope you guys have a tremendous day, and I'll see you guys in tomorrow's show.